Oil is jumping, Treasury yields are rising, Nasdaq futures are falling, and Bitcoin is back near $63,000. But that still does not prove a full liquidity squeeze. The missing confirmation is the dollar, and that gap matters one day before CPI. Brent traded roughly 2 to 4% higher across Monday's European session snapshots, while the 2-year Treasury yield reached about 4.24%, its highest level since February 2025. The 10-year yield was near 4.59%. Nasdaq futures were down about 1%. Micron fell more than 5% pre-market. The semiconductor ETF SOXX dropped roughly 2.7%, and Bitcoin traded near $63,050 after touching an intraday low around $62,580. Those moves are consistent with tighter financial conditions, but co-movement alone does not prove that oil caused every decline. The mechanism is straightforward. Higher oil can lift inflation expectations, reduce confidence in future rate cuts, and push bond yields higher. Higher yields then raise the discount rate applied to long-duration assets, which is especially painful for richly valued AI stocks and other momentum trades. A stronger dollar would normally intensify that pressure by tightening global financial conditions. Yet the dollar's signal is unstable. It initially rallied. Then one Reuters snapshot showed the dollar index down 0.2%, near 100.83, while another market snapshot placed it around 101.13. That means the oil and yield shock is real, but the full dollar-confirmed squeeze is not locked yet. Bitcoin ETF flows tell a similar story. US spot funds recorded about $90 million of net inflows on Friday, but that followed 2 negative sessions totaling roughly $180 million. Institutional demand has not disappeared, but it is not currently strong enough to erase macro pressure. At the same time, South Korea's KOSPI fell 7.6% as leveraged semiconductor positions came under stress, showing that positioning, not only geopolitics, is amplifying the move. Here is the confirmation test. The squeeze strengthens if oil holds its gains. The 2-year and 10-year yields remain elevated, the dollar firms again, and Bitcoin and chip stocks fail to recover after the US Open. It weakens if oil fades, yields reverse, the dollar stays soft, and Bitcoin reclaims the upper end of today's range. The next decisive checkpoint is the US CPI release tomorrow at 8:30 a.m. Eastern. The calm verdict is that liquidity pressure is visible, but a durable liquidity break is not yet confirmed. Price is the surface. The message is whether oil, yields, and the dollar begin moving together and stay together. This content is for educational purposes only and is not financial advice.